my name is Pedro Nunes. I am an Etoro popular investor, also known as pmnunes, and today I will speak about money management. Money management is crucial in life. I will divide this theme into three areas: investing, trading, and daily life. In investment, the main variable in terms of money management is size. In trading is the same thing, but with different practical applications. If my portfolio has just one stock, 100% is in that asset. And it will depend on the performance of that asset. But if I have 10 stocks, each stock will represent 10% of the size of the portfolio. It is not difficult to understand that diversification is achieved and will protect the portfolio, because if one stock decreases significantly, the drop of the portfolio will be just 10% if I add just that stock in my portfolio. Regarding to trading, the first thing to do is to explain the difference between investing and trading. According to Investopedia, investing and trading are two different methods of attempting to profit in the financial markets. Both investors and traders seek profits through market participation. In general, investors seek larger returns over an extended period through buying and holding. Traders, by contrast, take advantage of both rising and falling markets to enter and exit positions over a short time frame, taking smaller, more frequent profits. In trading, it is considered that we should risk only 1% or in the maximum 2% of our portfolio in each trade we made. I will show in the platform how I manage to risk only 1% of your portfolio. In very simple terms, I will explain how you can risk 1% of your portfolio on a trade. We have the CFD for the S&P 500 index. If we have a $1,000 account, 1% would be $10. So one way of doing that, in very simple terms, is to put your stop loss on that amount. Of course, you have to adjust the size of the amount you put with the stop loss, because your stop loss should be at a technical level. So you have to adjust the amount, because if you risk 1% and if 1% is $10, you could reach the stop loss very fast. So you can adjust that by reducing the amount. The stop loss should be chosen by technical levels. One other thing you should do is to choose a take profit at least in a risk-reward ratio for 1:2. In that case, if you have a stop loss of 1% of $10, you can put your take profit in the double. But as I mentioned, both stop losses and take profits should be chosen on technical levels, and then you can adjust the amount you put to match the 1% of the risk. Daily life. The way we look at our daily life and in which we do things in our daily life, it's the way we do everything. I'm going to give you 4 tips for your daily life. The first one is only invest money you don't need. If you do this, in the worst case scenario, you will lose that money. But in the best case scenario, you have the perfect conditions to make that money growth. The psychological conditions to make that money growth, because you don't need that money. Second, how do you invest only money you don't need? You have to have an emergency fund for when life strikes you with a big problem. The size of this fund depends on many personal things, but as a general rule, you have to have a fund with 3 to 6 months of your basic expenses. Third, do you know your overall wealth situation? This is very simple, and if you've never done it, you can do it now. Pick a piece of paper with a pen, or do it in an Excel sheet on your computer. On one side, all your assets, like houses, cars, money, investment. And on the other side, put all your expenses. Don't forget to put the loans regarding the assets that you have on the other side. If you do this, you will understand where you are. If you do it regularly, you will see if you are going in the right direction. Last tip. Do you know where your money goes? If you don't have an answer to this question, I will encourage you to, during 1 week, write all your expenses. You will have big surprises. But the important is to check if you are spending on your priorities. To finish, I would like to remember that if you have a good strategy, but with bad money management, probably you will lose money. But if you have not an excellent strategy, but good money management, there is a real probability that you'll make money. So invest in money management.